I am recording, Ash. Thank you very much. I just hit record. What a market. Excitement. Yes. Welcome to US bank holidays. Thanksgiving. Pretty quiet day, although there's a lot in the calendar. There's not much really in it. Although next week is, as I wrote in the report, you should all be getting that report. Next week. Yep, Chinese manufacturing on the weekend. And then we've got every man and his dog coming out talking to next week. So whilst this week's been nice and quiet, next week's going to be a cracker. Just on the trades that I've got, this pound Swiss yeah, it's going to take me out from that 0.25%, unfortunately. Range trade, just can't do it. And this one, I'm still sitting under here. There were two buyer bars here, but I felt there was no need to come up closer underneath that. I think this is a better level. So I'm still sitting there until we can make it. In fact, might as well now make it a day trade sort of thing and manage it on the daily bars. Now that we're in profit, just leave it there and manage it on the daily bars. There's not much. That's how you turn a 4-hour into a daily, for those who are wondering. There might be a little bit of resistance up here. We'll see how that how price manages that when it gets there. But I don't see much in terms of resistance on this until we get up here, which is that larger fib. We could potentially go from there to there on the weekly, or even back down to here, and there's nothing there. If we go to this one, nothing. So there's not much resistance in there between now and our target, or my target anyway. So that's good, managing it on the daily now. Pound, yes, you commented that in hindsight you didn't like the large bars on pound Swiss. Is that the oversized bars? Oh, that was on the 4-hour we were looking at. Yeah, it is crap, and it's all crap here, and I shouldn't really been looking at it. But I was expecting the pound to reverse off 63, but Carney's doing a good job. What I was looking at is found difficult is you could not trade this on a shorter time frame, because it just trades sideways and then has an aggressive move sideways and then another aggressive move, which just makes it really difficult. So whether it's short or long, just makes it difficult. Note to self, don't range trade. Never works. Well, it doesn't work for me. It works for some, just not me. Okay. So to the charts. I do have a few emails, so I'll do them afterwards. So it's all looking pretty ordinary. So starting with the Aussie dollar, trying to turn the corner. It's just not doing it. Trying to stay above 91. It can't even do that. Next support, minor there at 90 being just a nice round number, but we've got this here, which is on the weekly. It's minor on the weekly too. Joe Hockey, look, changing foreign ownership laws. Interesting. And the reason why this one here is 89 cents is just these two lows. Like the yen on the downside, as the yen's weakening as well, but all the yen crosses, the cable crosses, and the Aussie crosses are all in at extension and at the end of phase 2. So next week you'll be trading phase 2 right in front of central banks. That'll be fun. Not here. Yeah, there's look, if you don't have divergence at this stage, this little turnaround here is nothing yet. If we get a lower low today and RSI is higher low on Monday, there might be maybe a trade. RBA is on Tuesday, monetary policy. Stevens is desperately trying to talk this down, which is ridiculous. But yep, and even though the smart money is betting there's going to be no lowering rates, there is still a risk that he's going to talk the currency down or maybe even intervene, which would be the saddest day in Australian history. Like, yeah. Aussie CAD, on the other hand, showed minor divergence from this low to this low. There is this higher high and a higher low, so you would be looking at going in above this. Obviously, that's not going to happen with the way that the currency is heading at this stage, and your risk reward is not that crash. What's wrong with Glenn intervening and pushing the Aussie down? Spending your hard-earned tax dollars on trying to drive a currency down, which is the wrong way. The currency should not be going down. The currency should be going up. The value of a currency is the health of economy, and our economy is fine. You show me a number. You show me any economic data that says otherwise. It's fucking ridiculous. The market should drive the price, not the central banks. Exactly. Here we have a swing low on support. Again, there's a potential trade there. This is a high test, but it's not testing anything. It's just the sellers dominated at the end of the session. There was divergence, or Class C divergence across these lows here, which is good. If price can manage to get back up above there today, then there's a trade in that. Similar to the Oz CAD, but the Oz CAD is not as good as risk reward. This one's got a better risk reward, back to the 50. So, you know, you wouldn't want to see a lower low. If that happens, then your RSI you won't have divergence, but your Class C divergence here, which is not as strong as Class A, but that is there. So there is a potential trade there today based on that break of that high there, if you can manage to get all the way back up there. Hong Kong we don't trade. Aussie yen, the battle of the weakest. Well, there you go. Here's a currency that's been at intervention all the way through its life over the last 20 years, and look where their economy's at. It just doesn't work. Currency intervention does not work. It's just a waste of friggin' money. Your hard-earned, my hard-earned too. This one, there is a higher high, higher low. Aussie dollar isn't valued on economic fundamentals. It's valued too high as a non-money printing currency. Well, we're not printing money printing. We're not printing the currency, so we're not devaluing it, which is fabulous. The fact that he's not doing that is good. Intervening in terms of using the $8 billion that Joe Hock is trying to give him to sell the currency is intervention, and pushing the currency down. And similarly to the RBA has intervened back in the 90s and noughties when the currency was undervalued at 50 cents to try and prop it up. And I kind of disagree with that idea too. It's like let the market forces actually dictate what the true value of the currency is. Don't let the central bank do it. It's not their friggin' role. Natural market forces. I urge you to go and read Fountainhead by Ayn Rand, or just read anything Ayn Rand. And the fact that the Aussie dollar or our economic fundamentals are fine. Okay, retail struggled when it was above parity, and so did tourism. We'll find a smarter way to operate. Let's cut the fat out, and a bit of Darwinism. You got me on a rant now, mate. Our economic fundamentals are fine. Rio Tinto is spending another $300 million odd and ramping up because they can't get enough iron ore out to China. Okay, we're not, the mining infrastructure boom is over. So what? It had to end at some point. You can't have railway tracks going all over the country or ports all over the country. And it's now just, they've built that so they can get the iron ore out and then try and get it out as fast as China wants it. And China still wants it, and they're still growing at 7%, right? I don't see what's wrong with, the people saying, oh, the mining boom's over. Well, bullshit, it's over. You talk to anyone in the mining industry and there's plenty of it left. The other, they talk about two-speed economy, the mining and the non-mining sector. Well, the non-mining sector needs to wake the hell up and start trying to operate at a more efficient level. If they can't compete, then they need to find ways to compete. Work smarter, not harder. Right. Aussie yen going nowhere. Don't like it. It is a higher high. Trying to do a phase one off the 50, but that's about good. It's a debate for lunch. Yeah, sure. Right, Aussie Kiwi. What do you recommend with placing orders on Monday after Chinese data comes out on the weekend? Should we place trades later in the day? With Chinese data coming out, yes, if their manufacturing sector or manufacturing PMI shows a strong figure on Sunday, that you'll have a gap on Monday. So I would suggest don't place a new order to go into the market on Saturday morning, because the market could gap on Monday morning. So you'd wait for the open on Monday. If the Chinese data is going to push the Aussie dollar around, you'd want to wait until that is out of the market, and that'll be pretty much on the open. That'll price that in. If you're looking at Aussie dollar crosses, you might be use a lot less risk in your trades, because the RBA is out on Tuesday, 2:30 p.m. Sydney time. Okay. Thanks, Val. Right, Aussie Kiwi, Class C divergence across here. There is potential there with 1 day of buying, and I can't get back above that resistance level of $1.12. If it does, then that's looking pretty good. The Kiwi is looking mighty sick. Well, probably as sick as the Aussie. Both the antipodes are struggling, but it's quite a decent selling pressure, and 1 bar, it's just not going to cut it. I'd wait for another bar and look at this on potentially on Monday, and also a decent hold across above this support level and a hold above it. So look to get in up here. Personally, what will be doing is, those who are allowed to trade on the 4-hour, I'm waiting for a cycle above this on the 4-hour chart. And then I'll be looking for an entry on the 4-hour rather than sort of trading on the daily. That's what where I'll be going. If we see some good buying, get a good phase above the market and above the 50 EMA, and above this horizontal, come back, test it, and then away we go. Aussie Sing will be the same as Aussie dollar, but it's actually on the support or minor support there, and you've got another one down here, $1.14. There was a ring low there. If we can get if this forms a similar low, it's only a couple of pips away from it, and then closes higher, you'll have divergence there, which again, for a trade on Monday. Unfortunately, this is like we had at the first week of November, where everything was setting up for good trading opportunities, although in November it was all for phase 1 trading, and now it's for all phase 2. It looks like a lot of these are setting up, all the pound crosses and yen crosses, Aussie crosses, all setting up for trades right in front of all the central bankers. So don't know if that's a good idea, considering what happened in the first week of November. We all got nailed. I would certainly, like Euro CAD, CAD Swiss, it's the same trade. If one goes bad, both are going to go bad. So if you take Aussie dollar trades, say like the Aussie Swiss, Aussie CAD, or Aussie Swiss, Aussie Sing, if one of them goes bad, they're both going to go bad. Okay, so whether you risk 0.25% on both or 1% on both, you're going to be losing on both trades. So I would take only one particular entry prior to the central bank, and then maybe look for a shorter time frame on those trades. I know there's a couple of emails asking questions about that, so I'll get that at the end once we go through all the charts. CAD, inside day in North American Thanksgiving, not much action. Oil sort of still continues to slide. They had inventories out. I think pretty sure they had inventories out last night. Oil inventories. Nope. Okay. Must have been, yeah. So crude oil inventories, the stockpile of oil is increasing, and so oil also had got a bit weakened further, thanks to the stockpiling of it. Obviously, supply and demand idea. So that's where that's sitting at. Right. As we know, it's kind of getting up there to being overbought. It's got through this major resistance at 0555. Next resistance would be just literally that high there, 0615 sort of area, 0610. And then you've got another rather large one. I'm looking at the weekly. I'm looking at these two highs, these three highs here, and this one here. That's at 106.50 effectively. So that's the big one, and it might get there at around the same time. I had this as our divergence. It's gone through that. So look at this one here, and 106.40 is our 2 mark, which is where that 106.50 was that resistance. So up here, with exhaustion at the same time, hopefully find some divergence and opportunity to get short. CAD Swiss is looking reasonably good, still chugging along, still plenty left on the downside. There has been opportunities on the 4 hour for those who are interested. Back here, nothing since. Although that was off the 20, it's not as strong as the 50, so you should be doing less risk if you're going to take it. Bit of support here. This was low, obviously a couple of weeks ago, but also back in 2009. Underneath this, you've got clear daylight down to 80 cents. I'll show you what I'm looking at. There's that low in 2009, and then daylight down to here. Not even at 80 cents, it's 78 cents. Yep. With oil continuing to weaken, that's potentially, may not get there, it might just bounce off here. It'll be interesting to see, but through that, yeah, you've got a big slide. If anyone's long this, you'll be doing well. It's just chugging along, paying you. You should be earning interest on it, a minor interest, but probably earning interest on it. I don't see anything worthwhile in that though. Dollar Swiss, another one that's just chugging along. I know a couple of you guys are short it. I saw this as a higher than that, and therefore this downtrend was broken. I still believe 90 cents is a very large support, and so you've literally got about 50 or 60 pips before you hit that support, and that's why it's this range here. However, if you're in this, you would be trailing. You don't have a reason to trail your stop yet. Yeah, there's no reason to trail your stop yet, but you might consider keeping an eye on price action when it gets down to this 90 cent level, or maybe even getting out of a portion of your trade. Swissy yen. break your rules. I'm going to lose money. Why did I get out of that so early? In overboard, all the momentums are, this one's showing it's rolling over. That's interesting. This one's no divergence yet, no sign of sellers. It's well beyond our sell zone. On the weekly, there's no real strong resistance up here. Yeah, that's just one-way traffic. Can't bring myself to buy this now, and I'm certainly not going to be selling it at this point. Euro, where would you have your stop if you're in this Swiss yen? Well, I closed out here. This is like I did in the pound. I should have learned from then. Excuse me. You got 2 consecutive buyer bars. You'd have your stop probably around this area. You should certainly underneath that, but you've now got 2 consecutive buy bars here, 1, 2, and now you've got a third one. If Friday's a fourth one, you'd be coming under here. You see that that high and that low are the same, so there seems to be a bit of a level there. You'd come just underneath that at $1.12, nice, say $1.12.05, somewhere around there, or just under $1.12. If this bar is a higher high. There's no sign of sellers yet. There's no high test bar or anything like that. So at this point, I'd have my stop underneath this bar here, and then potentially when you got two more consecutive buy bars in yesterday and today, then you can move your stop again. Euro is still plugging along. Germany's doing well overnight. We've got ECB on Thursday night, and they're now sort of like Carney. Carney's a very smart man. I wish we had him. And he's over in England though, but I think Draghi and those guys are starting to realise the folly of their ways and looking at ways of exiting the quantitative easing. There's no real entry here for us on the daily. There was if you're on the daily a couple of days ago, and you'd be in a minor profit at this stage. And there's no reason to move your stop if you're in the daily. In the 4-hour management of it, as I said, my stop's underneath here, and I'll be moving, leaving my stop there and now managing it on the daily time frame. The Chinese data is not really going to have any effect on the Euro-US cross or any of the Euro crosses. China's is more of an Aussie play. So, yeah, if you're in it, you'd have your stop underneath these 2 lows here. Seems to be a good, reasonable level. Mine's at 35.55, and I'll now be trading it as a day. Still plenty of momentum on the upside to go for this pair. Unlike the pound and the Aussie, it's not at extensions. It's still around its moving averages and still in the start of phase 1. Euro Aussie butting its head up against $1.50, nice round number and extension. Overdone on the RSI. Mine was Class C at this stage, but the bar's got another 22 hours or 24 hours, 23 hours to go. So I wouldn't be getting too excited about it. This is similar to the Aussie Swiss, as you would imagine, and there is an opportunity there, a reasonable risk reward, but there's you need to wait to see this current bar. You need it to close lower so you get that divergence and get that selling momentum, and then taking short. 35.43. Yeah, that's all. That's fine. You can have it there. Euro CAD. This is CAD Swiss upside down. It should be going well for you. You're above that support line. That's a huge one. All right, on the weekly, you can see this. That's a big one. And daylight until you get to sort of there. 47, and that's another 300 pips away. Are you going to get there in this move? No, but there's still some more in it to go. Just a little high here. You can't get extension on it because that's your last sort of downturn. So those are in it. Congratulations. Euro pound. Yeah. Well, I was wrong about the pound sort of stopping at 63, wasn't I? Big support here at 83 though. Unless the pound continues to strengthen, which is a good thing. Currencies going up is a good thing. It means the economy is doing well. Right, Euro yen. This looks like the Swiss yen, although unlike the Swiss yen, this actually has resistance around here, and it's right on it. That level of resistance. You can see all these highs here. There's a Fibonacci at where'd that go? Oh, wrong way. There's the next Fibonacci is at 141 effectively, and that Fibonacci is from this high to this low. You're certainly in the sell zone. RSI, yeah, overbought. Stochastics is MACD starting to roll, and but we don't have divergence yet. We're certainly up in the area where you'd expect some turnaround. Euro Kiwi, yep, as it would, as it should, as we thought, heading back up. See, I can see a range and I can pick a range like the pound Kiwi. I just can't friggin' trade one. Cable itself has managed to surprisingly get through that major resistance level, and it closed well above it, a good 30 pips above it overnight. Obviously there's no divergence, and there's no real sort of major resistance level yet again until we get up to around 65.40. Just looking at the weekly, this high and there's a couple of highs across here. That's that's around 66.40 actually. Getting through there is the next major resistance. That said, your extensions, you could have it from here and we're right at 2. Yeah, or you have it from that high there and you're just at 1.272. That would probably make more sense, that one. As we know, RSI is yet to get exhausted. MACD still showing good strength. Stochastics, it can just trade sideways for a few more days yet. And this RSI is also showing no divergence. So the good old cable. Well done. Round of applause to Teflon Khan. Nothing really sticks to him. I did not see a reason to move the stop on euro dollar because there has not been 2 bars or reversal. Euro dollar, you on the daily or the 4 hour? I'm just going back in time a bit here. On the daily there is no reversal bar, correct? Or 2 buyer bars. Yeah, correct. If you got in here, that's a high test bar, that's a higher high and a higher low, and only 1 day, 1 buyer bar, so there is no reason to move your stop, correct. So your stop would be under here, but those of us who went in on the 4 hour, we've had that reason. But because my stop is here under here on the 4 hour now, I'm protecting a little bit of profit. I'm now moving to the daily, and I'll manage it on the daily time frame rather than the 4 hour. Pound Aussie. One-way traffic. There's your resistance. There's your extensions, and she's at 80, slowing down, and that's because yesterday's bar closed at around the same price as the previous day. That's why your momentums will be slowing down. But there's nothing there yet. Pound CAD. So glad I got out of this. Yep, it too is knocking on the heaven's door up here. Just need to see some sellers, and judging the way the cable's going and the CAD's going, that's not going to happen. Can't bring myself to you can't sell that. I just can't bring myself to buy it either now. It's way too gone. Needs to pull back before I get in. Here. Yeah. One would suggest that we've got an uptrend here, cycling along the 20, or what do they call those things, a rising pennant or some sort of chart pattern like that. Price getting squeezed in there. That would suggest that it's going to break out and head north. Yeah, I dare say that's what's going to happen. Of course, whilst I'm short. Price action is certainly showing that is the case. Pound yen, we had a swing high with a high test. It's gone, didn't get us in, and it's got going. And now you're really stretching the friendship to try and find a resistance here. 65, 62 was the resistance. It's now almost 200 pips above that. The next resistance level is 68.80. 68.80. But like all the pound and the yen crosses, this one's even more extended than most. Pound Kiwi, broken out of that little range that I had, above $2. I'll take that off now because it's over and done with. The weakness in the Kiwi, I can't see this coming back into that range. I'd say where we might, your momentum's overdone. We might fud ass around above here or around here. But I just can't see this coming back down to $1.90. More like going to 2.1, 1,000 pips the other way, 1,000 pips up. Yen, again, it's still want to get long or short the yen. I'd love to be short yen. So this is, I think, going to $1.12 or $1.20, at least $1.05. But as we know, there's clear divergence there now. Look at that. Where are the sellers? Come on. They're all on holidays in the US. That's clear divergence. That's what you want to see, Class A divergence. There's a bit of news out on the yen today. Maybe we'll have a swing high and the opportunity to short this. Ben Bernanke is talking on Monday or Tuesday, I think, but other than that, there's nothing in the US until non-farm payrolls on Friday night, so there might be an opportunity there to do a phase 2 trade, and I'd say that I'd say that's probably the safest of the lot, even though the pound and the euro and the Swiss yens are further extended than this one. This looks like the safest because it's got the most clear divergence. The others don't. Kiwi, yeah, rubbish, absolute rubbish. Is there an opportunity on the 4 hour? No, there was back here, but it wasn't prepared back there. But yeah, it's bye-bye, baby. Going back down to 77, which is where it should be. And why do I say, yeah, it's fine to sell that currency because they've got nothing. A couple of dairy cows and a few washing machines. Compared to what we've got, their currency shouldn't be doing better than ours. Sorry, those from New Zealand. I don't mean to pick on you, but it's good fun. This one is, yeah, with zero interest in this. It's just doing nothing, a bit like the CAD yen. I've got and the Aussie yen. There's no opportunity in it. Sheep, don't forget the sheep. Yeah, I think the sheep are worn out for the Kiwis, aren't they? Literally. Looking at each individual bar, you've got the sellers are actually dominating, except for this one here. So this is sort of just inching way up. But yet, this is what you take the colours, you put colours in the chart, and you go, okay, up bar. Oh, I hate that. The sellers have actually dominated, and whilst we're getting higher highs and higher lows, it's actually the sellers dominating in a rising market, and that's why I'm not all that interested in this. Woohoo, colour! No, I'll take that away from you. I get too excited. Yeah, there's a colour, white. Yeah, and that's why I haven't really been sort of US dollar getting stronger against this thing. Yeah, I believe this is a buyer's market. If I get a cycle and a hold over here and then take this long, the US are going to taper at some stage, and they're all wondering, why is their economy not doing so well? It's because the Fed keeps talking their freaking economy down. It's just what Stevens has done, saying, we need to keep quantitative easing going until they see positive results in the economy. Well, their economy's doing all right. Yeah, they're adding 200,000 jobs in a month. We struggle to add 20, but they're adding 200,000 in a month. That's pretty good. Even if you're going back in the stats, they're doing 120 a month. That's pretty bloody good going, adding 120,000 jobs in a month. Their economy's doing fine. They should be tapering. They don't need quantitative easing anymore. And the fact that they keep talking about it is sending out to the marketplace that they're concerned, and they just they want to keep going because lining their own friggin' pockets. That's what they're doing. Rand. The drivers of the Singapore, look, are they oil? Petroleum. They've got oil refineries there. And container movements, they're right in the middle of the shipping straits of Malacca, so they control that quite a bit. And oil refineries, we buy our petroleum from Singapore. Other than that, Singapore's huge in financial services as well. So I'm not exactly sure I haven't really done much research on their economy. So I'm not sure what drives that price. Rand, some people took this swing low and they're looking well for them. Again, there's no reason to move the stop. You've only had one buyer bar. There could be an opportunity for those of you who want to take it there. Although the spread on this is quite wide or large, there is now looking to be a cycle above the 50 EMA on the 4 hour. So now that you've got enough trend established in this, the little pullback, which is natural in a market, could give you an opportunity on the 4 hour to get in on this if you wanted to do it. But just be aware of the spread. In a 4 hour trade, your number of pips that you're getting are less. You're looking probably, even if you're only going up here, 300 pips, and if you're giving 50 of them away in the spread, then that's a bit nasty. So that's where we're at. It's Friday, I shouldn't be so aggressive with you guys. Right out. To some emails. Euro dollar question was, does this count as FOMO? Possibly. You should have been trading with trading on this day on the daily. It's not as clear because there's not a clean cycle above the 50 EMA, but there was a massive support line here. You can see these lows here at 34.85 or thereabouts. And when you saw this swing low here and a hold above it, that's when you'd be placing your order. So it is a bit of FOMO, but there's still plenty of it to go. So I'd say 36.17. Well, you'd be in that trade now because that hit that last night. This looks like it'll run up to $1.40 at least. Yeah, $1.40 at least. 38 fib is 100. Well, yes, it's just the previous high. You mean it's not 100 because that's just the previous high. 0.5% risk. Risk reward is 8.7. 44 pips risk. Why 44 pips risk? Why 44 pips risk? It's 35.73. Look, if you're doing the daily, your stop should be underneath this, which is 34. Yeah, and that's not 5 pips below the bar. It's 5 pips, or preferably a bit more than 5 pips, but 5 pips below the swing low. Okay, 5 pips below the low of that movement. Yeah, not below the low of this bar. Okay, out here you're swinging in the breeze in the middle of nowhere, and you're liable to get shot out there. So you need to put it back underneath resistance, which is now support, back under support. Okay. Right. Pound. Well, trend continuation long, that is FOMO trading, right? You're not buying this here. You're no way. Okay. 63. I mean, if you're looking at the cycles of the market, where are you? You're in that what do they call it? What is it? The social traders. Right? Missed the opportunity. You'd be now looking for keeping an eye out for sellers and trading it back down. Higher highs and higher lows. Well, again, I don't, and this is the reason why we haven't been in it. I don't think so, because that's the same high. This is low and this is lower low. Yes, it's above the moving averages. Well, no, you're not getting support because you're way out here in no man's land. Horizontal support, $1.59. Well, you can't claim that's support when you're getting in 400 pips away. Higher high, higher low, RSI convergence. Yeah, it is converging. Bullish price action. Oh yeah, there is bullish price action, absolutely. Fib. Okay, so you understand where I'm coming from, Matt? You're just, okay, good. CAD. Yeah, you've got an even longer trend line if you have a look at my charts. Is the RS showing hidden divergence? No, that RSI is showing convergence. It's making higher highs, and so is the RSI. hidden convergence is in an uptrend is on the lows. Right? If this is an uptrend, which is what this line signals, then hidden divergence you'll find on the lows at the start of phase one down here. Okay. So it's convergence. This is probably changes the position I would take. If it is divergent, then it's likely to retrace to the trend. If it is weak, then I think it may continue. Fundamental probably tell me it should reverse also. Yeah, this is a trend reversal, not a continuation long. Again, we're doing this is a bit of FOMO trading or social trading out in out here. If you saw me do my charts earlier, you'd know that we're looking for a reversal, trend reversal on the way back down. Okay. And last one from this gentleman is, okay, more FOMO trading. You're at the end of the cycle, mate. Look at it. Okay, another, you're looking for trend reversal. You're not wanting to trade long out here at the end of, look where price is into relation to the moving average, and then go back to your, even on the CAD, you had this phase one, phase two, and if you're this far out from the trend line or the moving average, well then you're in social trading, right? So you expect to pull back and then you trade. You're trading the bounce, not the extension. Okay? All right. What do we got here? We've got a weekly chart. Yeah. I'm not sure where this trend line is coming from, but it's getting there. There certainly was a reversal there. Right, so what do we said? Okay, so you're looking to go to long, so entry at 90.50, stops at 90, target 93, long, risk 1 to 2, good. Entry to, yeah. One thing is we didn't have divergence, okay? You need to see divergence. Trendline support, fib retracement support, no levels of resistance, bullish price action, possible ring low. So it looks to have triple bottomed. Yeah, it looks like it, but it hasn't. It's actually, well, it's actually low. Look, I agree with you. I think that's all going to happen, but we don't have that divergence, and that's a must-have when we're trading against the trend. Okay. But yeah, I'm seeing things I shouldn't be. Yeah. It's just you open it up and you go, well, where's the moving averages back here? So I'm well into phase one. Then I should be looking at a trend reversal. Same with the the pound or the CAD. Well away from the 50 EMA. Then I'm not looking to buy it. I'll be looking to sell it. Okay. Just coming back to the Aussie dollar. I don't see. Well. Yeah, okay. Look, this is RSI of 17. This is RSI of 17. So we do have a double bottom there. I'd prefer to see some divergence around here, though. So across these kind of bars. So like this, right? There's you want to see it out of this move, this phase one. That's where you want to see the divergence across there at the end of that phase one. So from this cycle to this cycle, I don't think it's as strong as if you see divergence around here somewhere. Okay, so we now have a similar low in price. In fact, we can see that the low on that is 65 and the low on that is 64. So we have the same low, and we have RSI as at a higher point. If this manages to close above this, preferably as a bullish bar, then you'll have clear divergence, and if then Monday's a higher high and a higher low, then you'll be trading against Glenn Stevens and buying it long, and I think that's a good trade because it's a muppet. But wait for price action, okay? Pound Aussie weekly. Yeah, certainly up there. Larger resistance is still a distance away, but it's good price action. Daily composite, okay. You got resistance, you got the bearish price action. I don't know if we've got that, mate. It's an inside low test bar. Yeah, bearish price action, inside low test bar. Low test bar by themselves are a bullish signal. Yeah, although you do see them in a trend like that. So that's a, the buyers clearly dominated this day, closed on the top of the bar. So the buyers are still here, and if the buyers are dominating, we certainly don't have bearish price action. If we have a lower high and a lower low tomorrow, and you still have the divergence, then yes, there is a potential trade here. But there's, I don't see the bearish price action in that. Okay, Kiwi short phase one. Yeah, look, I would prefer to. The gentleman says, "Would you prefer to see a cycle underneath it?" Yeah, I would. Hang on a sec. You're giving me that too many points. I've forgotten what the points are. Where's my checklist? Checklist, trend continuation, phase one. We're certainly in phase one, right? That's clear. So what do we need? Point one is lower highs and lower lows. Are we getting lower highs and lower lows? Yeah, well, each cycle, yes, and in price action, yeah. Are we below the moving averages? Yes. Yes, we are, but the 50 is still on top of the 200. But yep, resistance, yeah, you could say this bar was resisting the moving average. Horizontal resistance, yes, and you'd probably bring that even a bit further down to get this low and this low. RSI convergence, that's on 14, champ. I know I use 14 as well, but that's just to see if it's overbought and oversold. What you guys can do though is another way to do it is have RSI 6, right? But then change your settings to 80 and 20, and then you can say, oh, and then you can say, okay, now it's in oversold. That's the same as having RSI at 70 and 30. And so if that's the case, we're looking at RSI 6, we're getting close to oversold. Of course, it can get overbought and continue to go. It's only an indicator. But yeah, you're right, it is in convergence. But you just got it on 14, so just be careful of that, mate. Put that back to 6. Where were we? 1, 2, 3, 4, 5. 2, 3, 4, 5. RSI convergence. Bearish price action. Yeah, the sellers are still dominating. Support in the way. Well, you could give that a point because there's no support until you get to 77. So you could give that a point. Fib retracement. Now this is the tricky one. You've drawn the fib back to there. That's looking for fib extension, and so you're expecting price to come down to here. Trend line resistance. Yeah, there's no point. 1, or I can't remember what 11 is. But right, Fibonacci. That's the tricky one. Okay. you want to see as reason Fibonacci. You may not get one. You know, it's just 1 point on the checklist that may not exist as the market's reacting to it. So, and it doesn't look like it is that the market is reacting to any of it. So you just can't give it a point. Is there a trade there? Look, you'd have to say there is a potential one there. Sort of trading at around 81.12. Your stops above this here at 82.70. So it's about 150 pip, 160 pip stop or something like that. 160 pip stop, and you're looking at a potential sort of 370. So yeah, it's a decent risk reward too. It's just you can see cleaner entries in other charts, but you know, that is can't deny that there's a setup there that sort of does fit the rules. Okay. Aussie Kiwi trade setup. Checklist, please advise what is seasonal bullish. Mate, you're online. Seasonal bullish is, if you've done the Prop Pro course, seasonal bullish is that equity clock, which is just tells us, okay, tells us what the currencies do against the US dollar. Okay, so we can see that for the Australian US, the month of November is pretty scrappy, and so is the first half of December. Right? So there's not much signal there compared to something like you know, August and April, which are clear. So that's the Aussie dollar is, you know, pretty much sideways against the US. Whereas the Kiwi in November is a little scrappy to being stronger. Right? So if the Aussie's going sideways and the Kiwi's getting stronger, then the you're not getting, that's a bearish for the Aussie Kiwi. So you could say, you'd have to say no to seasonal bullish because it's not. Okay. But again, that's just 1 point out of the many. 4 out of 6 trend reversal. Okay. Some are thinking there's this range, and some are thinking that it's a trend. I agree with you, it's a trend, and I wouldn't be targeting that. I'd be targeting probably that trend line there. I'd even preferably $1.20 or the 200. So strong level of support. 111, is that a strong level of support? I know 112 is, and that we're trying to get back above that. Don't know if 111 is. I'm going to believe you and say it is because I hope you've done your research. We've got Class C divergence, yes. Fib extension levels. Yep, cool. Bullish price action. Yeah, I prefer to see it above 12, but I do concede to the fact that this does fit, and if you want to trade it, then by all means. Bullish chart pattern. No, I agree. And yeah, so that all looks pretty good, mate. Phase 2 ahead of news. Have I pretty much covered that? I know you. Can you hear me? Have I pretty much covered that answer? Looking at the Aussie and its crosses, thinking to take the best two and put 0.25% on each. Yeah, sure. Just be aware that if the Aussie does go against you, that you're going to lose 0.5%, because there'll be no saving you on both of them. Okay. And I do hope you're right, because I think that anyway, that's just my fundamental and political view, to say the least. Right, guys. That's that's it for today and this week, this month. Um, and it's been a tough month for all of us. We're back again on Monday, and what next week? How many have I got? Monday, Tuesday, and Friday, and that's it for the rest of this year. So there's only three more, three next week. Monday, Tuesday, Friday. We do have some boot camps, the prop boot camp on Wednesday and the prop platinum boot camp on Thursday. So I guess I'll see a few here for that. Would equity clock influence your trade? Previous Kiwi short trade as November showed New Zealand strength at this time of year. No, not really. It's that's an average sort of thing over 20 years. And whilst it's it's kind of fun little thing to look at. It's not. It wouldn't drive the equity clock seasonal chart. Wouldn't drive me out of a trade or into a trade per se. It would be just like, oh, okay, yeah, well, I'm bullish, and it, the seasonal thing says bullish. Well, then that's fabulous. Oh, it's bearish, and I'm bullish. Well, then price action rules. Yeah. No worries. Yeah, you guys have a great weekend. Sorry about my diatribe on it before. And yeah, we'll record them. Don't worry. I'll make sure I'll record them and I'll leave them up. But yeah, you guys have a good one, and we'll chat next week. Cheers.